And we are live. Let's get ready for a different take. Hey, if you were here yesterday, and you don't need to have watched my live stream yesterday to be fully into the one today. But hey, listen, I want to apologize to everybody first and foremost. I didn't mean to scare anybody and create panic. The title of yesterday's presentation was Worst Case Scenario. And I took us to a pretty dark place because when you talk about worst case scenario, that means worst case. But let's move on from that because today I want to tell you that, and I said this yesterday, just because I say worst case doesn't mean most likely scenario, but I want to put things in context. I want to give viewers, you, the information that you need, the way to think about things. Some people just cannot take certain investment risks. Some people can. And it's really difficult to talk to a broad audience in general terms. I can't really do it in specific terms because I don't really, that's more of a one-on-one conversation. So market's up just about 1,000 points today. Doesn't make up for the 3,000 point decrease yesterday, but I like this rally for a couple of reasons. It's really significant. Something changed today that I want to talk to you about, and a couple of things that you can do to go on the offense. Because if you recall from yesterday, I did say I did something yesterday that I haven't done in a while. I did some buying yesterday. I bought stocks yesterday. I did it. So how negative could I be? So let's just roll with the quick intro, and then we are going to break it down, and I really want to be off the stream in about 15 minutes. Let's go. We're back. Thank you for watching the intro. This is a significant day, not because the market went up and today just, I don't get overly excited in this kind of volume or size moves, 5% days. I don't really do all that much different just because the Dow is up or down 1,000 or 2 or even 3,000 points. The Dow, by the way, the S&P 500 and the NASDAQ composite, these are indexes. You cannot invest directly into an index, but you could invest in a security that mimics or tracks an index. I'm Mitch Goldberg with Client First Strategy, and this is Be the Boss of Your Money. Trump has basically caught up. If you recall in the 2008-2009 financial crisis, when government programs, fiscal stimulus, when these things were first rolled out, the market kept going down. They weren't considered adequate enough. In fact, the more the Fed did, the more the Treasury and everyone else in Congress and the president, the more they did, the lower things went. Until finally, they started hitting on the QE and they worked on the TARP, a $750 billion troubled asset relief program. And that kind of reminds me of what Trump is trying to do. When that $750 billion was announced by Ben Bernanke and Jim Paulson, that was like a crazy number. Now it's $1 trillion. And you know what? It's like a reasonable number in today's day and age. That's how far we've come. Basically, if you feel like you missed the rally last year, you have it now. I mean, stocks yesterday were down to where they were in December of 2018. Hey, this is supposed to be a positive play here. So I want to share with you a couple of things, okay? First of all, okay, we know the cause of this dilemma that we're in, okay? Coronavirus. When we fix this, we fix a lot of things, including a potential financial crisis. We get things done. We'll get the market will get back to its feet. The economy will get back to its feet. Okay. We are going to get through this. We have to do it together. Everybody has a role to play. Social distancing is not, it's not a joke. It's something that you have to take seriously. And as we get more into the testing and we figure out where we are, and the tougher the measures are that cities, that municipalities, that government takes to help control this virus, the better off we're going to be. I said last week, tougher medicine is what the market and what the economy wants, because the sooner we get out of this coronavirus crisis, the sooner we can get back to normal. It may be a new kind of normal. Some things may never go back to the way they were. It's going to suck to get through it, but we will get through it. Things will get better. And if you think about all of the stimulus that the Fed has pumped into the economy in the last week, if you think about the QE that they're going to be doing, if you think about the $1 trillion that the Trump administration is proposing, and Treasury Secretary Mnuchin said getting dollars directly to consumers. Just think about pent-up demand, loose money, cheap credit, just money all over the place. How good we can actually, how quickly things can bounce back and even possibly exceed where we were before. So this actually is a setup for a very bullish scenario. Hey, I've been saying all along, for those who said I was being too much of a negative Nelly yesterday, and I agree with you. We went to the dark place, okay? But if you follow me, and if you follow the articles I'm quoted in, and everything I've written, and some TV news appearances, I've consistently said, if you're a long-term holder, a long-term investor, stick with your investments. You'll be okay. If you're investing monthly or every pay period into a retirement plan, what have you, keep doing it. A down market is your friend. I've been saying this for the whole time. Okay. So let's get back to that. Keep on keeping on. Keep on investing. If you're a long-term investor, this is not a bad thing for you. The airline sector, possibly other sectors, will probably be bailed out. I think that's pretty much the expectation that's built in to the market, because this is what our government, the feds, our president has been saying. So like I was saying, in the beginning of the 07, 08, 09 crisis, a lot of things that the feds did, that the Obama administration did at first, weren't working. I remember on one day, the Federal Reserve pumped $100 billion into Fannie Mae and $100 billion into Freddie Mac. It was a Monday. The stocks rallied, the market rallied. And about an hour after the open, everything went down, and went down a lot. You have to hit the right chord. So far, the policy responses, I think, have been weak. I think everybody agrees with that. But the last week, things have turned around, and now the policy responses are getting a lot better. The medicine is getting a little bit more bitter, but that's what we need to put this coronavirus away. And the fiscal stimulus, the monetary stimulus, this is what we need to not just survive, but to thrive. And that's the point of this. Let's talk about not just surviving right now, but thriving. Okay. So there are a lot of companies that are doing great things. I saw Facebook announce that they're going to give $100 million out to small businesses. I don't know if that's a loan or grants, however, but that, they're sending out funds. Disney is releasing movies right to their streaming service, because they realize that we can't take our kids out to see the movies and people are stuck at home. Okay. And I want to tell you something that I did. I sent a post out on LinkedIn yesterday. If you know me, you know that LinkedIn is like my main social media. I love LinkedIn. And I should wish to hell that I had this post up here before I, went to the live. But you got to see this. I asked my LinkedIn fam, I said, hey, everybody, help me out here. What are you doing to keep your spirits up? What are you doing? What advice would you give, et cetera, what advice would you give to other people to keep up their spirits? What are you doing to get through this time? And at first I put this up. I thought, it's just going to be a dopey post that nobody's going to really pay attention to. I can't believe how many views, reactions, and comments that I got from it. So I want to thank everybody, and I want to put that up. I'm going to share my screen with you for that. Okay. I know there's a few people out there where I'm going to get back to you. I'm going to take a look at your questions, comments, and things like that and see who's out there. Okay. But I wrote here, I'm going to share my screen with you, and I'm going to give you a few of these things that people said. Share screen. You're going to see it in a second. Share. Okay. It's easier for me to see it on my screen over here, so that's why I'm not looking right at the camera right now. Okay. But some of the comments here were 59 comments. That's a lot of comments. So I'm going to just tell you what some of the people here said. This is about getting through this tough time we're in and coming out ahead with the ability to not just survive and come out weaker, but to thrive and come out stronger. So I'm going to share with you some financial tips and things that you can all do so that we are setting ourselves up for an opportunity going forward. It's going to be tough to get through this time, but we are going to get through it. By any estimate, we're going to get through this 3, 6, 9 months. It's really not that, it's not too long of an amount of time. I'm not dismissing the human toll, the tragic of it. I'm not dismissing that. But we all have to get through this together. And if we can keep a positive attitude, and if we can keep calling on people who need us, who need our help, who are feeling socially isolated, people who are in need of food and other supplies, we can help these people. Hey, I said this last week in my LinkedIn and my live stream, and I said this in my blast email on Friday. So this is nothing new. Again, I got doom and gloom yesterday, but that was to give you a worst case scenario. So this year is from Jason McAlone. He's one of my favorite people I follow in social media. And Jason is a very big proponent of work from home, remote jobs. That's his business, helping people find remote jobs. Establish a routine that makes you feel good. Shower, exercise, coffee, meditate, you decide. Take breaks. Call a friend, FaceTime chat with someone, or chat with a neighbor, okay? Put up pictures that make you feel good, that empower you. That's what he said, empower you. I like that. Pictures of your family, of an achievement, of a vacation, etc. Okay? But there's some other really, really good ones here, okay? Nick Nielsen said that, Nick, okay, I hope it's okay to say the last name there, but hey, if you comment on my videos, I guess I could say your last name, right? Okay. You've been banned from the local gym, okay, because your wife doesn't want you to get sick. So that's pretty cool. So you like watching movies, a hot cup of tea, and that's how you relax. My friend David is a friend of mine from college. David's a big outdoorsman, and he lives in a rural area. So he goes out into the woods a lot of hikes. You have to see the mountain climbing and things that he does with his daughters. It's really incredible. So that's what he does. That's what he does. And if you could take a look, John Paul, I think it's Macedo, says, read the Bible, reflect on the positives of the situation. Absolutely. There are plenty of others. I'm just going to get through one or two more because I don't want to bore you with the details. I want to give you some ways that we could take advantage of the down market and the economy and come out better. Okay, so page is not loading at the second. Computer runs slow when you're live streaming. What can I say? Okay. One fellow, Ryan, is a big cook. That's what he does. Kristen hangs out with her dog and a big workout person. Chip, you had some good things here. Your daughter babysat for someone in need so that they could work. I love hearing that. Someone else said that watching the news constantly is like watching the ticker of stock school day. You see a lot, but you learn nothing. So let's take advantage of this time to learn. Learn how would we do in a tough time. We're going through it now, and I've gotten nothing but love and from friends and family all around, and we've been giving it back, my wife and I, and it's been so far a pretty tenable situation, and I'm very happy about that. So I'm going to stop sharing the screen. There are 3 things that you could do right now as an investor. The first thing is rebalance. Now, I've been preaching, and any financial advisor I speak with has been preaching the same thing. And I'm connected on Facebook with a ton of financial advisors, and I see their content, and I can tell you this is a very big positive. I've been in the industry for 30 years. This is the best the financial services industry has ever been. The quality of the advice, the quality of the people out there in the securities industry is really, to me, incredible. And everyone is pulling together as a team, and sharing a really good message is to stay the course. Nobody ever made money panicking. We'll get through this. We've always gotten through other obstacles, and we'll do this again. We've all been preaching rebalance when the market was higher. Rebalancing means that if you had a certain amount of money in stocks and a certain amount of money in bonds and cash, and your account goes down in value, that means you have a lower percentage in the stock component of your portfolio. That's what you could do now. So maybe sell off some stocks, your fixed income component or cash component, and put that money back into stocks. So rebalance. Right now, if you rebalance, bonds are really high, stocks are really low. I don't know if stocks are at the bottom or not. I'll address that in a moment, but they're a lot lower. The thought that you and I are going to pick the exact bottom is probably doesn't make the most sense. But just buying low should be enough if you're a long-term investor. It's a treat. We've been given, in my opinion, a gift. The whole market has been tossed out like garbage. It doesn't make sense to me. And you have so many companies with really strong balance sheets, ton of cash on the books, companies that don't even need you to come into a store. They don't even have stores. There are a lot of good companies. I'm not into naming individual stocks in this broadcast, just so you know. The other thing you could do is you can upgrade on the downgrade. Upgrade on the downgrade. What do I mean by this? You have your stocks, and they go down. Everything is down. But what about getting rid of the companies in your portfolio that maybe didn't prove to be as high quality as you would expected or hope for? That happens. That's investing. Things, they don't always work out. Sell them. Get rid of them. And don't hold on to them because, they're down and you don't want to sell a stock that's down. Get rid of them and replace them with a higher quality company. Maybe a company that has a more stable dividend or a higher dividend. Maybe a company that is more of a brand name in the market, and maybe get rid of a second tier company and upgrade it to a super high quality, best of breed, first tier company. So, and if you do that in a taxable account, I have to say I'm not a CPA or a tax advisor. I don't give tax advice. I'm not qualified to give tax advice, but you can certainly consult with your own tax advisor. If you do this in a taxable account, not only are you upgrading your portfolio, but you're harvesting tax losses as well. So there's a double bonus for you in a taxable account. But don't not do it because you're not in a taxable account. You want to upgrade on the downgrade, and think in terms of this. If you have an investment that's down, would you buy it today? And if it's down, but you still believe in the company, you think the stock is worth holding, then do that. Hold on to it. But if you say to yourself, it's really not like a top tier company, what are you waiting for? If you wouldn't buy it today, then yeah, on that logic, you have to sell it. So I would sell it and upgrade into a true blue, high quality company. That's what I would do. Other advice that I have for you, let me pull out my sheet here. I have a Word document that I made before I did this. Okay. So rebalance, upgrade on the downgrade. And now a couple of personal finance things you could do. Okay. Review your credit cards and see how many points you have. And take those credit card points, get a gift card, and use that money to buy something for somebody who's cooped up inside their house who can't get out. This is kind of an idea that I got from my LinkedIn stream thread yesterday. I don't remember exactly who said it, and I want to give this person all the credit in the world. But what this person said on LinkedIn, okay, is some things to do to get through this crisis where we're cooped up, maybe getting cabin fever, can't really go out, restaurants, the gym, etc. Our normal life has changed, but what can we do to combat that and to actually do something from home that we can, do to make the world a better place? This person said, go on Google and give positive reviews to the local small businesses in your community and give them a boost like that. They'll be super happy to see it. You'll feel good that you were helped out. So go give those Google reviews. Every business owner wants a nice, happy Google review. So go ahead and do that. And then my friend Beth Granger said, how about give people a shout out, a positive review on LinkedIn? We can do all these things to make each other feel good. These are all networking type of things. You get the credit for it. Your name is always out there for a positive review. The person who received the positive review is happy. Isn't that like just like the greatest idea? I love that idea. So go give somebody a review. If you're on LinkedIn, give somebody your endorsement. Give somebody a shout out. Look, we have LinkedIn and Facebook. Let's use these for something positive as opposed to some of the negative discourse that we all see going around. Okay. What else can you do? Call someone who can't get out. I have a friend who lives in Florida, and he posted on Facebook, hey, everyone, I'm in Florida. Now he travels between New York and Florida. And he said, if anybody has a parent or a relative down here and they need me to run an errand for them, to get some supplies for them, go to the supermarket, or pick up something at the drugstore for them, let me know. I'm down here. There's nothing else to do, and I'm happy to help. These are the kinds of things when you say, my faith in humanity is restored. How wonderful when you people do these things. I love to see that. I'm going to take a quick look at my Facebook posts, LinkedIn rather, and see if anybody's out there. Stay with me a second. This is the best part. Okay, we've got a couple people watching. Thank you very much. Greatly appreciate that. Maybe I turned some people off yesterday because I was such a negative, such a negative Nelly. Okay, but let's see if anybody's out there. Hey, Michael, great to be with you. Thank you so much. That is awesome. Let's see who else. Thank you so much. Thank you, Lori. Thank you, Jamie, and some other people out there who I see. This is just really terrific of you. All right. And if you have any questions, hit me up in the comments. So here's the thing. We're going to get through this. If you're a long-term investor, stick around. Don't make hasty decisions. If you want to do something in a positive way, you can upgrade the quality of the investments in your portfolio by kicking out lower quality investments in your portfolio. If you want to rebalance, you don't have to just wait for this to be an annual thing. The size, the magnitude of the move that we had in the last 4 weeks has been gigantic. I mean, from this past Friday to Monday, from the top of Friday to the bottom of Monday, that was a 5,000 point drop in the Dow. So these kinds of moves, you don't see these kinds of moves sometimes in an entire year, let alone 2 trading sessions. Okay, and that's about it. I'm going to end this broadcast. We've got a lot of good things going on. I'm seeing the best of people everywhere come out, and I am seeing really good responses, policy responses from the feds as well. And I've been watching Governor Cuomo, New York governor. Everyone I think agrees he has really stepped up and he's doing a great job for the state of New York. And he's marshaling neighboring states like Connecticut and New Jersey to help out. And I see the policies. I see how things are moving forward. It's not fun It's bitter medicine, but it's what we need to get through this virus situation as quickly as possible so we can get back to some semblance of normalcy. Hang in there. Investors, hang in there. Like I said yesterday, I did some buying. I'm glad I did. That's me. It doesn't mean that's appropriate for you, but I'm just telling you what I'm doing. And that to me is a pretty positive mark. I will see you soon. If you have any questions that you think of after this broadcast, let me know. I'm here to help. And I love hearing from people. Okay. I love hearing from all my social media connections. And I'll see you soon.